والوالدين بإحسان ذلك تخفيف.
Yeah, again, guys. So this will just be a video on continuation patterns. I made a video on reversal patterns the other day, and most people have been requesting for the video on continuation patterns. So let's just get straight into it. So now there are three things you need to pay attention to when looking for your what for your continuation patterns, and the three things are your break of structure, your inducement, and your point of interest. Your point of interest might either be your order block or your breaker block. Now, if you notice, when I made a video concerning reversal patterns, I mentioned that there must be four things present for you to what for you to confirm your reversal patterns, which was market structure shift, your sweep, your inducements, and your point of interest. But you can see that for continuation patterns, it is different. It is what break of structure, inducement, and point of interest. Now, when looking for your continuation patterns, you don't need anything like market structure shift. Market structure shift is only for reversal, and break of structure is for continuation. Now, personally for me, I trade six types of continuation patterns, and I'm going to be explaining each and every one here. So let's get straight into it. Now, like I said, you need what? Three things, which is your break of structure, inducement, and point of interest. Now, if you look closely at this structure, you can see that this was what? This was a break of structure to the upside right here, right? And after that, we got this pullback. Remember, your first pullback after a break of structure is your what? Your inducement. You got this inducement right here. Price pullback up, and what? This was our point of interest. Now, this point of interest is what? An order block. Now, can you see how simple this structure is? Right? This is a very, very simple structure. This is the basic continuation structure that everyone should know. Right? Everyone trading SLP should know. So this is a break of structure, inducement, another block. I already marked it out for you guys. So now once you see this kind of patterns, as far as you, and also pay attention, you must be following your directional bias, meaning before you start looking for patterns like this, market must be bullish, right? If market is bearish and you are looking for continuation patterns that is bullish, you know that like you are likely to hit a sell. So when market is bearish, you look for what? You look for bearish continuation, and when market is bullish, you look for bullish continuation. Now, if market is in a bullish scenario, you can be looking for structures like this, right? It's the same thing for bearish scenario too. It's just that it's inverted. Let me show you guys. If market was bearish, right? Sorry, where's that certain stuff here? Okay. Now, if market was bearish, it's just can you see? I've inverted it. Can you see? If market was bearish, this was the same thing you'd be looking for, right? So that's just it. Now, since market is bullish now you know that you want to be looking for continuation patterns. You now be looking for what? Break of structures to the upside, right? Now this is a break of structure to the upside. We have our inducement and order block. Now these three things that I mentioned here, which is break of structure, inducement, and point of interest, once the three is present in your pattern, then you are good to go. You can now take your what? You can now take your buys from this level, from your order block, right? And target what? Set your SL just below and target to take out the either price created, right? It's as simple as that. Then for this second structure, now this is where things get tricky for some people that don't really understand how continuation structure works. Now in some cases, you see that this was a breaker block and this was another block. Unlike this one now, when price created this break of structure, you see that this inducement, right, it mitigated this breaker block. That was why this breaker block was no longer valid for use, right? That was why this breaker block was no longer valid for use. That was why we focused on the other block. But in some cases, price will not mitigate this breaker block. It will create an inducement for the breaker block. Now how do you go about this? Now this is the way you go about it. Now when taking trades from your breaker block like this, meanwhile when you know that your order block is still below, right, your inducement, this inducement that price creates now, is a inducement for what? It's an inducement for your breaker block. So once you take your buy from this level of order block, so now in some cases it might be something like this, whereby there's something like this I right here coming from here. Let's say there's an I right here at this side of the chart, right? Now for some people, just because they don't really understand how the structure moves, some people will not take buys from this breaker block because of what? They already saw everything that is present, all the things I mentioned here, which is your break of structure, inducement and point of interest. You now take their buys and target what? To take out this I, right? Price will now trigger this point of interest. Price will be moving. They'll be happy that yes, I'm in profit. Then before you know it, price will just reverse, smash the SL without taking out this I. Then they'll be wondering, but I got everything that they said I should look for, which is my break of structure in this main point of interest, and I should target what? Nearest I, or I should target another draw on liquidity. You know that this is the nearest I, and this is another draw on liquidity here, which is another high, right? But in this kind of scenario, whereby you have a breaker and an order block, you don't target the overall high. You target what? Your nearest high to take profit, right? You target your nearest high to take profit. Now the thing that market is doing is what? This first entry will be serving as what? As an inducement for this breaker block. You see that as price has tapped into this entry, now this entry now becomes an inducement for this other block to be used. Now in this scenario, once you take your breaker buy and you take your profit from this level, then you reposition for what? You reposition for your next trade, which will be coming from what? Your other block, right? Which will be coming from your other block. Your SL will just be below, and what? Now you are now safe to now what? To now target your overall high, because of what? There's no more valid point of interest for price to go back to. Price has already used your breaker block, and now it's coming back to use your other block. So this first entry will be serving as what? As an inducement for this breaker block to hold. It is as simple as that. So I hope you guys understand how this second structure works. Now, for most people, for most newbies or most people that don't understand the market, this thing tends to like fuck them up a lot of times, because of what? Most of them will set their take profit at this high, right? And price will eventually go back to eat their SL, and they'll be wondering why. So this is the reason why. So pay attention to this kind of structure, so that when you see it next time in the charts, you don't make the same mistake. So that is that on this structure. Let's move to the third structure. Now, the third structure is a liquidity based structure, right? Now, what I mean by liquidity based structure is because of what? Your exit, meaning where you are to take profits from, is coming from what? A trendline liquidity level. Now, for most of you that know, this is a trendline liquidity, if you understand. This price moving in lower highs, lower low, lower highs, lower low is what? Is accumulating liquidity. So now, in some cases, there's some structures like this, whereby price will create a trendline liquidity from this left side, right? I'm coming. Price will create a trendline liquidity. And now, notice something whereby when price wanted to break structure, you see how price broke two. You can see that this was the first break of structure we had, and this was the second break of structure we had. Now, this thing here is called a double break of structure, right? It is called a double break of structure, whereby if price breaks two zones continuously with an impulsive move, it is called what? A double break of structure. Now notice how the inducement what? Mitigated the two breakers, because you know that there will be a breaker here, right? There's a breaker here, right? And there's also another breaker right here, right? Now two breakers, they like that. So notice how when price was pulling back down, price what? Mitigated both breakers. And once price has mitigated both breakers, those breakers are no longer what? Valid for use. Then you see that when price pulled back down, it created the inducement without mitigating this other block. So this other block is still valid for use. Price pulled back up and tapped into this point of interest. Now, this point of interest, you now be able to now take buys smoothly, right? I'm coming. Be able to take buys smoothly like this. Yes, I'll just be below. Now your targets will not be nearest high or anything. Your target will be what? To take out your trend line liquidity, right? That will be your target, to take out your what? Your trend line liquidity. So this is this for this structure, for this third structure. So whenever you see this kind of structure, always pay attention to it, right? Always pay attention to it. And in some cases, right, in some cases price might not what? Price, so because of it might happen too, so pay attention to it. In some cases price might not what? Price might not take out price might create inducement, right? Price might create inducement for this breaker block without mitigating the breaker block. So in that case, you are not going to be waiting for your other block, right? Let me just adjust it for you guys to see. So now, for instance, let's say price created something like this, whereby there was an inducement here like this, right? Let's say price created something like this. You know, it already mitigated what? It already mitigated this first breaker block right here. Now, this second breaker block that is here like this, once price taps into it like this, do you understand? Where is it? Once price taps into it like this, right? Your target will be what? To clear this nearest high. The only reason why you are going to be targeting what? To clear this trend line liquidity is if you notice that what? This high is very close to the trend line liquidity level. So let's say this is the trend line liquidity level and the high that price created is something like this. It has taken out the last high of this trend line liquidity level. As far as it has taken out this last high of this trend line liquidity level, now you are now safe to now what? To now take your what? Your profit from what? From this whole trend line liquidity. I'm coming. Why is this thing behaving like this? You're now safe to now what? To now take your profit from this whole trend line liquidity like this, right? You're now safe to now take your what? Your whole profit from this trend line liquidity. But the only reason why you know what? You wait for your other block to come and trigger is only if this pullback that happened here, this move right here, this high, right? This high right here is what? This high right here is not near this trend line liquidity at all. Let's say you are seeing something like this, your take profit will still be what? At this level, right? So you need to pay attention to these things. But in most cases, for this kind of structure whereby price has created inducement, it is usually the first point of interest that price taps into, that price will use to what? To clear the whole trend line liquidity. In most cases, price doesn't come back to, it's not even in most cases, in all cases, for this kind of structure whereby you have a trend line liquidity coming from this side, right? Not an eye like this. So you have a trend line liquidity coming from this side like this, is mostly once price taps into that first point of interest that it triggers, it tends to just like take it out, to like take what? To take this eye out, because you don't expect what? Price to create this little eye and just buy to the upside and just reverse back to another other block. So for this kind of structure, don't even wait for any other block, right? Don't wait for your other block to come and trigger. Just take your profit from what? This eye, the first point of interest that triggers. So, and if it's for the same thing too, that what? That is what? That it was the breaker block, right? That it was the other block that price triggered, something like this. Something like this, whereby this was the other block. Your what? Because in some cases there might be another other block here. In some cases, for this structure, this blue like this, there might be another other block here. You don't worry, don't pay attention to that other block. Just pay attention to what? The first point of interest that price triggers, and use that point of interest to now what? To now take out this eye. Do you guys understand? To take out what? To take out this eye. The first point of interest. If it was the breaker that price firstly triggered, use that breaker, use it and buy to clear what? To clear this whole trend line liquidity. And if it was this other block, use it and take out what? Don't wait for another block below, right? or another point of interest below. So I think you guys understand this one. Now this I've explained three structures like this. Now for the fourth structure is your simple break of structure. My neck is paining me, bro. Sorry guys, my neck is paining me. I'm having neck pain. Okay, so guys, you guys are really enjoying them. It's out of my busy schedule. I'm making these videos for you guys. So please make sure to like, subscribe, and hit that follow button, guys. So now for this fourth structure, this was what? This is a break of structure, and this is your inducement. Now notice how this inducement did not what? Mitigate this breaker block. Now in this kind of structure, usually there's no other block always, right? There's always only a breaker block, meaning if you check this low right here, you won't find any other block. So once you check this low right here and you don't find any other block, you are now safe to now what? Take your buys from what? On this breaker block and target your what? I'm coming. Why is this thing taking time now? Which kind of, I don't know what's wrong with this thing. So you can set your SL just below and target what? The nearest eye, or target your next eye. Probably if there's an eye like this here. I'm coming. If there's an eye like this here. Now the only reason why you do this, that you target this next eye, is only if there's no valid other block below. Pay attention to that. Only if there's no valid other block below. So that is that on this structure. This is a very simple structure. If you paid attention to everything I've been explaining, since you're not supposed to make mistake for it. Now this fifth kind of structure, right? This is the fifth kind of structure I trade. Now this kind of structure is a kind of structure I will advise you that if probably from this explanation that I made you don't understand it, it's just best for you to just avoid the structure. But if you know that you understand it, you can trade it. Now this kind of structure, you will notice that what? Okay, a lot of people do fall for this kind of structure. A lot, they fall for the trap. Now for this kind of structure, you notice that price has created what? I'm coming. I don't know why this thing is what's wrong with this trading view now? I'm coming. Let me restart my trading view, guys. My network is bad, guys. I'm coming. This video will be long like this, so let me just. Alright, sorry guys. Oh, is this structure taking time now? Sorry, please, guys. I don't know why this thing is taking time like this. My network is fine, and I don't want this video to be long. Good. No, I can't even make another video here. I can't cut this one and stop. Let's just have patience, guys. Really sorry, guys. When you're watching the video, you can just fast forward all these places, right? And just go to the main video. Oh God. Okay. I think. Okay, let it load. Structures are not showing yet. Okay, sorry guys, sorry for the delay. Okay, so now let's just go back to this. Now where did I stop? Okay, this structure. Now, pay attention to this structure. Like I was saying earlier on, I said what a lot of people fall for this trap, for this kind of structure, whereby there's a break of structure, right? There's a break of structure. Now you notice that after this break of structure that price created, price won't make any pullback, right? Price won't make any pullback. Now price will now be coming when price is now approaching back to any of these POI. You know that this is a breaker. There's a breaker here and what there's an order block here. Price will now be approaching this zone with what trend line liquidity, which means lower highs, lower lows, lower highs, lower lows, like that. Do you get? That's the pattern that price will be using to approach this. And now if you are not careful and you are not familiar with this structure, this is what you do. You mistake one of this trend line liquidity level for an inducement. You mark it out like this, that this is your inducement. You take a buy from here, right? You take a buy from sorry you take a buy from here. Price would I'm coming. Sorry guys, my trading view is having problem, bro. You mistake what? You mistake this breaker level for what? For you mistake that trend line liquidity for an inducement, and you take buys from what? You take buys from this breaker. Now what will now happen? Price will push up to the upside because you'll be thinking that you are moving in profit, but what? Price is just merely just creating trend line liquidity. That's why in some cases you'll be noticing that you take some trades, price will move up in slight profit of about 2 RR, then price will go back to hit your SL. What's wrong again? Which kind of network is this now? I'm coming, guys. Okay, sorry guys, please. So like I was saying, in this kind of structure, right, what will price do? Price will now what? So some people now fall for this mistake whereby they will take their buys from this breaker block, right? Mistaking this pullback, this trendline liquidity stuff for an inducement, right? They will mistake it for an inducement. Then what will happen? Price will push up a little bit, then smash the SL, and price will go and respect the other block, and they will be like, but what was wrong? I got my break of structure, I got my inducement and my point of interest, which is my breaker. Then why the price did not respect me? I just went down here. Now you need to understand that this kind of structure, you notice that this trend line liquidity that price is creating is not an inducement, right? This kind of structure, you notice that there's no inducement valid there. You notice that price didn't create any inducement. So for this kind of structure only respects order block. It doesn't respect breaker block at all. So now this trend line liquidity that is happening here is the one serving as an inducement, meaning it is generating liquidity for what? For this order block. So once price taps into this point of interest, this buy will now be what? To now what? This buy will now be what? To now take out the trend line liquidity that price has created for you. I'm coming. It will be to what? To take out the trend line liquidity that price has created for you. Your take profit will now be this level. So now note, this kind of structure doesn't respect breaker block at all, because most people fall mistake for this, and what? They'll keep on doing it because of what? They did not know what they did wrong. You know, for someone that took this SL now, that took the SL, that used the breaker block, if price hits his stop loss and he has already analyzed and back tested, we just look at it that probably it was just market doing his thing. You just probably think that market just hit his SL probably because of some other reason. You will not know that because of what? Market doesn't respect what? Breaker blocks in this kind of structure. And anytime he sees that kind of structure, you keep on using the breaker block because of what? He's not familiar with the structure. So pay attention to all these things. This kind of structure only respects order block, right? This kind of structure. That's why I said it is best for you. It is something I would advise someone that if you don't understand how the structure works, it's better for you not to trade it than trading it and using the wrong point of interest for it. So I've explained 5 structures. Now let's talk about the last one. this video is already getting too long. I wanted to show you guys live examples, but I think I'll make a part 2 showing you guys live examples on the chart. You know that these ones are just structures that I'm drawing out. I'll make a part 2 because this video is already getting too long and I won't be able to upload it very well on YouTube if it's too long. So now, this last structure, let's just quickly go through it fast. You can notice that this is a break of structure right here, and now this break of structure, when price was coming back here, you can see that it didn't create inducement for this breaker block, right? It didn't create inducement for this breaker block, right? So this zone that price has created, this other block, you can see that price has created inducement for this breaker block. So instead of you to be paying attention to this breaker block here, you'll be paying attention to your other block that has inducement, right? Paying attention to your other block that has inducement, and price will just tap. Now some people will be confused because of they did not see any break of structure for this level, because of your inducements have to be your first pullback after a break of structure. Now why are we ignoring that rule? Is because of price did not create inducement for this breaker block. Price is just pulling back, and as you can see, this is the only point of interest that has a pullback. So this is where you be buying from. You totally ignore your breaker block, right? This is where you be buying from, and your SL will just be below, and your take profit will be to clear to clear the high, right? So that is all on continuation patterns. I feel like with this video you guys should have understand, but I'll still make a part 2 using live chat to explain, because this video is already getting too long because of that network issue we had. So GG's guys, just be expecting the part 2. I might drop it probably later in the day. So GG's guys.